Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. In today's video, we will discuss Medical Properties Trust with ticker symbol MPW, which is a REIT in the healthcare sector. Currently, this stock is down around 54% over the last year. This is mainly because it has some problems with the tenants and got forced to sell some of their properties in the last few years, which brought down the estimation of this stock. Despite being very low currently in the valuation, I have realized that there are no insider trades ongoing, so there is no acquisition despite being a compensation for working at the company itself. So there is no insider buys. Let's hop right into the estimation. MPW, as said, is a healthcare REIT currently trading at $8.25. They have increased their earnings per share over the last few years pretty much, but let's see how this will look in the future. Currently, they offer a very high dividend yield of 14%. Now we will start with one of our four valuations, which is Graham's valuation, where I've plugged all values in, that is the earnings per share, a negative growth rate projection for the EPS due to having problems with their tenants, and the current yield of AAA corporate bonds, which brings me to an intrinsic value of $3.03. Now we will have a look at the multiples valuation with other REITs in the healthcare sector. So I have used Omega Healthcare, Community Healthcare, and Care Trust as their comparison. And I've plugged in all the values, which brings me to the price to AFFO multiple of 10 to 13. And according to the AFFO of MPW, which is $1.42, the intrinsic value of MPW should be around $70. The discounted cash flow analysis calculates the future free cash flow and also includes the value of the cash equivalents, and total debt of this company as a calculation basis. I have plugged in all the values of the free cash flow and a growth rate projection which is rather pessimistic of around 5% due to selling off some of their properties. And also you can see that the cash and cash equivalents are rather low compared to their total debt, which is currently over $10 billion. Their shares outstanding are around 600 million shares. And this brings the intrinsic value of this company, considering all the present value of the future free cash flows, to around $6.05. The dividend discount model considers the dividend and also the dividend history of Medical Properties Trust, which grew in the last 10 years, which we can see on, for example, Seeking Alpha, that over the last 10 years they have consistently grown their dividend or at least not decreased it, which is a major fear currently, that they might have to cut their dividends in the future. But nevertheless, over the last 10 years they were very consistent with their management strategy. This brings me to the average growth rate for their dividends of around 4%. However, due to having problems with the tenants, I project a growth rate of only around 1%, which brings me to an intrinsic value of around $19. Considering all of those four valuations brings me to an intrinsic value of around $11.45. If we want to apply a 20% margin of safety to the intrinsic value, we get an acceptable buy price of $9.16, which makes it currently a buy. If we want to have a higher margin of safety, let's say of around 25%, we still are in the acceptable buy range currently. I would like to know what you think about this company in the comments down below, but please keep in mind this is no investment advice, this is just my opinion.